All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on January 22nd, 2023. And as always, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and, of course, trade responsibly. What's going on, Yoda? Good to see you. Of course, may the force be with you as well, my man. That's right. K. Ol's in the house. Says holla for $1. That's right. Hey, we're getting those dollars. You already know that. All right. So we're going to talk a little bit about Bitcoin, about the recent move over the weekend. We can go ahead actually and start with crypto and then just kind of work our way from there because there's a lot going on here. So we talked about the futures chart. Everybody seems to have forgotten that this is a thing. And we were able to, once again, just sort of by looking at the spot market and the futures chart, just essentially see that while we had already fulfilled the back test of the 200s on the spot market, we were actually like consolidating around this level, which corresponds with where the 200s are on the spot market. But obviously, we can see the 200s are up here on the futures market. So that little move that we got on the end of the day, Friday before the close, and then we saw a little more upside over the weekend and then kind of opened up here, and you can see we're moving up a little bit. So we're almost to that target. Obviously, we expect to tag both of those 200s on the daily at about 23,645. So that was something like a 2-to-1 risk reward ratio we have basically discussed. 12.5% to the upside or 6% to the downside on the gap fill, and we were consolidating above a key level. So obviously seemed more likely that it was going to head to the top. Obviously we were already in that position far in advance, but we do need to keep an idea or keep an eye on this gap fill here. Because let's just say, for instance, this was the bottom. We fast forward into the future a year from now, and we have not put in a new low. At some point in time, we're likely to fill this gap, but it's possible it's a breakaway gap, and we never come down to fill it. But typically, most gaps get filled. So what I would think is likely to happen is we continue to the upside, we take our targets, and then we get a retrace. And when we get that retrace, we come down, fill the gap. Maybe we go further. Maybe we just fill most of it. But it seems probable that we'll at least head back down to like 20K at some point in time. Now, maybe we won't go below 20K ever again. Maybe that's it, and we're done. But we'll have to wait and see. But in the meantime, that kind of playing out as expected. And we can see corresponding on the spot Bitcoin chart, we're well above the 200s. And that extra leg up was basically after consolidating above the 200 exponential. So the real question is right now, we obviously had a back test right here that failed. And then we went into the bear market. But I mean, in all reality, this is the transition into the bull market. So as long as we're above the 200s, they're going to have a positive slope. And as long as they have a positive slope, I'm bullish. So realistically, at this kind of transition period, it's essentially like a coin toss which way we could go, because we could very easily break back down into a bear market. Or this is very much the beginning of the bull market. So you have to kind of like make your own call on that one. Pay attention to longer time frames. But for me, this is the beginning of the bull market. So it gets a little sketchy around these levels. But I like to use, fair value or, the 200s as basically my like measure or entry exit points, depending on what I'm looking at. So I'm still in a position where I'm taking profits along the way. Sold most of the crypto into the most recent pump just on the short-term time frames to see how everything kind of plays out. But the truth is, realistically, as long as we're holding on Bitcoin above 21K or like 19.6 on the dailies, I'm pretty bullish on Bitcoin, honestly. What would make me, when I say pretty bullish and you're like, well, I thought we just flipped into a bull market, I'll be much, much, much more bullish once we're above the 200s on the futures chart as well. Because in the past, when we have seen discrepancies between the spot market and the futures market, very, very oftentimes those discrepancies were like in hindsight or in advance, you know, for us, we're like flashing red sign, like, you know, basically like warning, something's going on here. So for me, I always like confluence. Obviously, the more things that agree, the better. And I think the future chart flipping bullish will technically be really nice. And obviously, if we're talking about a retest of those levels, you know, getting above 23,550 will be very, very bullish. And then if we look back at our two lows, you know, the macro low and then also the Rona dump right here. We had the green fib on one and the white fib on the Rona low. We could see we came down here basically to the 0.5 of both fibs. And now we're back testing the 382 of both fibs. So we have a little cluster of resistance right here at the white 382 and then the 200 exponential and simple. So it's going to be difficult to get through that area. When we do break through that, we have this little macro kind of like high right here from the way down, which is what we're currently like fibbing from since we took this one out already. And, you know, if we break through that, there's a consolidation area at about like 28.6, but that's essentially if we break through 25, I think it's very, very high likelihood that we're in the low 30s pretty quickly. Now, all that being said, we're obviously at the top of the range. We're reaching at least some temporary exhaustion. So we don't want to get overzealous at this point in time. But we're very close to essentially what amounts to, you know, either flipping into a bull trend or confirming back into a bear trend. And then that's likely to last for, you know, months or even years. So let's take a look at the spot chart, and we just want to look at how this price action is developing. So initially we had talked about basically getting a move up to the 200s and then sort of like a retrace from there and just not violating the one. Obviously we have overshot that, not in a bad way or anything like that, but you know, that's great. So we made it out of that descending channel. We made it up slightly higher. We have the internal fib retracement from this fib right here to the low. And so obviously once we take out that previous swing high, that's 100% or 1. Well, we made it exactly to the 1.236. So maybe we keep going to the 382. Maybe we keep going to the 1.5. Anything's possible. We're just saying for now, hypothetically, that was the top and we're going to get a pullback. It probably looks something like this. The 1, the 2, the 3 up, the 4 back test, the descending resistance line, as well as the 200s, as well as our macro fib right here. And then if and when that area holds, we likely get a fifth leg up, probably to the 1.618 or maybe to the macro 382. So the same way we have those fibs on the futures chart, we can do the same thing on the spot market chart. I just have right now in position the blue one from the macro low at like 3,000 up to the high at about whatever it was, 69,000 or whatever. And we could see basically we came down just kind of shy of the 0.5 and then we have broken back above the 382. So that blue line right here is that macro 382 and the yellow line is the internal retrace from the all-time high to the all-time low. So once we come down here, cycle low rather. Once we come down here and put in the cycle low, the first thing we're paying attention to see is it valid to start fibbing from the high down to here is we want to touch the 1.236 minimum. And we did that. We broke above it. That was part of our cluster of resistance. So what I suspect is happening right now, and this could be completely wrong, we'll have to see how it plays out, but oftentimes you get a big cluster of resistance like this. The macro, you know, 382, the 236 of the internal retrace, the 200 moving averages on the spot market as well as the futures market, the descending channel that we've been in. I mean, there is a lot of resistance right around this level right here. Not to mention if we pull up the weekly and then we say we're running into the 200s from the bottom, back testing them, you know, all this stuff is right in this area. A lot of people are basically going to set stop losses around that area for like short positions, or they're going to take profits around that level. And oftentimes you'll get an extra move up from there. So then what I want to see is what happens after that move. We broke through a bunch of resistance. We broke through this whole cluster. We're out of this descending channel. We're back above the moving averages. So at some point in time, we're going to get some kind of pullback. Now, it might be a super shallow pullback. It might be a really deep pullback. We might even go to new lows. But I want to see what the market does when we have that pullback, because that's what gives the market and myself confidence that the trend is actually flipping. So if we hold above the 200s, we could literally just go sideways. I don't need to see any strength out of the market. Just sideways is good enough for me because we're above key levels. And if we take our measure move here in green, of this descending channel, which obviously we had a little poke out right here. We broke down from the channel. We were able to recapture it. So, you know, that's a false breakout or whatever. We ended up going to new lows after that. But regardless, this is basically the only like little outlier from the entire channel. So is it possible we get another situation like that where we break out, you know, can't actually get anywhere and then eventually fall back in the channel and go lower? It is 100% a possibility. We do like the bearish version of this. This is the bullish version. You know, we break down and then we recapture it. So it's like, oh, thank God. The bearish version would be a breakout and then it fails. And it's like, psych, gotcha. So it's definitely a possibility. But the majority since November of 2021, you know, 90% or whatever of price action has taken place inside this channel. So breaking out of this channel and this whole cluster of resistance right here likely leads us to, you know, much higher levels. So if we take this measure move of the channel and just measure from the bottom to the top, that's going to give us a target up here, which is roughly like 35K, which also corresponds with some of like the previous lows from like the Elon Musk pump and some of the other stuff. So do we have to get there? Well, maybe not. Maybe we just go, you know, down here to a new low, we come up to 236, we consolidate, we get a higher low pullback, then we make it to the 382 and we top out there and it fails. Maybe we make it to the 0.5, 50% retracement of the downtrend, and then we go on to new lows. We don't know what's going to happen, but what I do know is a breakout and consolidation above all of this key resistance looks good, and we're likely at least going to attempt to move to the upside. So we broke out. Now we want to see the market says, okay, we broke out, but can we trust this breakout? So that's the consolidation. And then where do we find support? And then after that, assuming the market's still confident, then we start moving to the upside and we see how much momentum can we gain, you know, how much movement can we get out of it. And then as long as we're just putting in higher lows, as long as we're above all this cluster resistance, you know, that's the beginning of the bull market. And likely we end up at new all-time highs within, you know, a year or two. So we don't want to get overly bullish. We don't want to get overly, you know, bearish or anything like that. But at this point in time, it looks like we're breaking through some very key levels. Obviously, we did a deep dive on Bitcoin recently. So Ethereum above the 200s. That is definitely good. Blue slope moving up. That's what we want to see. Total market cap on the weekly is retesting the 200 exponential and simple, which is, oh, you know what? I did want to talk about that actually. We're going to go out to the weekly chart here real quick on Bitcoin. This was the move we've been talking about, we've been discussing, we've been planning, we've been participating in, which is just the back test of the 200s. So we broke down below the 200 exponential and simple, went on to put in lower lows, and now we're just back testing the 200s. We're very close to crossing the 821 back bullish, which is a good sign. We have a bunch of green histograms, we have a blue slope line, we have a buy, sell, buy. This is all very bullish stuff right here, except that we're underneath the 200s. The 200 exponential is about to cross under the 200 simple. The 200 exponential is already red. That stuff's not good. So it is good normally when you have this happen and you find support on the 200s and then go higher. It's not nearly as good if you're under the 200s because this feels like, you know, basically we're going into a bear trend. We backtest to see if that trend is strong or going to confirm. And then if we get rejected, we go to put in new cycle lows. So I don't love that. If this was taking place above the 200s, I would be much, much more bullish and I would have much more conviction to the upside. Right now, you know, I have temporary short-term conviction on these moves. You know, some of the moves that have already taken place, already played out, but not so much on the long term while we're below those 200s. So a lot happens as we just like chew through these key levels. So total market cap, I mean, it's no surprise at all. We've been calling for the 1 trillion back test, which we got. So that's exactly what's happening. We basically broke down to pathetic 750 billion market cap and then back tested 1 trillion. We're below the 200s. So we need to see what happens here. Momentum starting to pick up. If we reclaim the 200 exponential, you know, market cap probably soars after that. And let's be real, it's not going to be from Bitcoin. It's going to be from everybody, air quote, investing in shitcoins. Okay, so if that was the shakeout and that was it, this is the easiest crypto bear market we've ever been through. And you're like, what do you mean it's the easiest? The second biggest exchange went away and Sam Bankman-Fried's in jail and, you know, whatever other terrible things happened, all the scams and everything went to zero and blah, blah, blah. Nah, whatever. Didn't seem like a hard bear market to me, but what do I know? I mean, if it was your first one, maybe it felt a little worse. Bitcoin dominance, we see the bull cross has taken place. This is with all the dirty little cryptos, including Stable coins, we're still operating inside this channel. Seems very likely we're going to backtest the top of the channel, aka we go to orange line next. That's at 48%. So yeah, it seems very likely picking up momentum here. We take out those stable coins and we actually have a much more bullish picture. We have this ascending support line. We're definitely in a bull market on the weekly based on like the 821. We don't, obviously we're still well below the 200s if they existed on this chart, which they don't. Cardano broke through the descending resistance. It's now moving up to the 200s. Seems very likely it's going to 42. So we were having discussion in the group over the last couple of days, and I was just making a point, and I think a lot of people like don't necessarily like keep things in perspective. I think Cardano's a good thing to keep in perspective. So when we hit the lows and then we rally up and everybody's like, oh, we're up 63%. Cardano's amazing. It's almost doubled in the last like 2 weeks, blah, 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 blah. And everybody gets excited and you're like, oh man, I'm missing out. The bull run has started. It's back going on. I mean, if we look at this chart, this looks like a complete meltdown. And we've had plenty of these like pathetic little rallies that looked great at the time. We were like, oh man, Cardano, that's it. We're back in a bull market. It's up 64%. And then it proceeds to melt down, you know, and that was at like $1 something. And then it goes to like 20 something cents. So it goes down another 75% after it goes up 64%. But the most important thing is when something does what Cardano does and just completely dies, you know, essentially like goes to zero, but like not quite. This thing has gone down 92%. Okay. So people are like, oh, that's not that bad. 92%. I mean, you didn't even lose all your money. You still have like $8 left. Congratulations. But the thing is, if it goes down 92% and you're like, well, that's cool because it already rallied 65% back to the upside. Well, it doesn't work like that. It doesn't work like that. If it goes down 92% and then it rallies 65%, it's still down 87%. So that 60 something percent, if you bought the bottom right here, is great and everything. But if you bought it any time before that, you're just down a little less, but you're still wrecked. Okay, so 92% down. So in order to get back to all-time highs, and the magic number is 1,177%. So Cardano has to go up from its lows 1,177% to make up for the 92% to the downside. So that's what we're after. We're after asymmetric returns. So something like Cardano, which probably doesn't go to zero, let's be real, at least for a little while, okay? You know, most cults, even after they're fully exposed as being cults, don't just go away, okay? Because people are in it. They're in it. They're in it to win it. Their whole life is based on that. They're defined by that cult. So they don't have a choice. They're not just going to like start over and redefine themselves. No, they'll just drink the Kool-Aid until, you know, they move on to the next life cycle. So anyway, 1,177%. If you think Cardano is going back to the all-time highs, which I don't. I mean, I think it's complete trash, but it probably is because it's crypto. So the trashier something is the better. That being said, Cardano's not even close to like the level of trash that the rest of the crypto market is. So I talk shit about Cardano, but like it's still like, you know, in the top like 100, at least in my book, compared to like the 20,000 cryptos. So if I think that about Cardano, just imagine what I think about some other crypto that I don't even know the name of. So that being said, 1,200% upside compared to if this thing goes to zero, whether you believe in Cardano or not. I mean, that's pretty good risk reward ratio. I mean, if it goes to zero, you lose 100%. If it goes back to the all-time highs, you gain, you know, well, it's already up a little bit. So it's not quite 1,177%. So you're late to the party. Might as well not even invest, quote unquote, air quotes, because you'd only be up 700% from here. So it's not even worth getting out of bed for 700%. But regardless, if you just look at Cardano and you say eventually the cult is strong enough, it's not going to pull an XRP and just never go to all-time highs again through a whole cycle because it's complete trash and the cult is dying. Cardano's cult is still strong. So that's 700% upside compared to 100% downside. So it's 7-to-1 risk-reward ratio. So, I mean, I don't want to put my life savings in Cardano. Matter of fact, I'm not going to put anything in Cardano just because I don't like Charles. I find him obnoxious and he's full of shit. But that being said, if you did like Cardano or Charles or whatever, 7-to-1 risk reward ratio. I mean, I wouldn't do it with like money on my credit card, but if you have some extra quote unquote investment speculation money laying around, 7-to-1, and you say, oh, it's going to take 4 years, but you're going to make 700% or it's going to go to zero. Asymmetrically, risk reward ratio is pretty nice. Now, not everything melted down and almost went to zero like Cardano did. So you're not going to get, 700 or 1200% upside on most stuff. But I mean, if it's like 5-to-1, it's probably not a bad setup. If you believe in whatever crypto it is, which you shouldn't, because it's probably going to zero. But, hypothetically, you can say the same thing for tech stocks. Sure, most of them probably go to zero. Well, the unprofitable ones anyway. So Chainlink, complete meltdown. This thing has got like a pretty chunky channel. So there's actually still like a ways up if it was going to go back and retest the top of the channel, which is like 950. So you're probably looking at about a 50% rally from here if this thing can get back above the 200s. Polkadot broke out of the descending channel, back tested 200 simple. 200 exponential is at 728. Seems like the next likely target. The measure move breakout of the descending channel, where it has literally spent, it's not quite a channel. It's kind of like cheating. But it has literally spent, I mean, between the blue and the red line since November of last year, like 99.9% of the price action is inside this channel. Broke out of the channel at 821, flip bullish, and we're back testing the 200s. I mean, this is what dreams are made of. This is what it looks like when you break out of a bear market. You know what, actually? Let's go back here and talk about Bitcoin. But we're not going to talk about right now on Bitcoin. We're going to talk about the last time Bitcoin did this. Because if you didn't like experience this rather in real time, you might not have like the best like realistic idea of what it felt like to be in these markets when this was going down. But essentially, this is like the key. Let me turn off these. Well, I'll leave on the moving averages. This was like the key like setup for Bitcoin. I mean, that pretty much everybody was looking at the time. So there was two ways you could kind of draw like the descending resistance. One is if you use the top, and then you had to use this right here, and then we kind of like broke out and then fell off a cliff. So some people were looking at it that way. A lot of people were looking at it this way, where they just kind of skipped like the blow off top here and then just used these series of highs. And this basically just formed. And you're like, well, obviously we know what it formed. You don't need to use the tools. And I'm like, well, TradingView asked me to actually use the tools correctly. They didn't really do that, but. So we have this like descending triangle. We break down of it, measure move, and then we start building this ascending triangle. And obviously we'll color code this in case there's any deaf people watching the stream. This is obviously a bearish pattern. And then you guys know green means go. So obviously this is a bullish pattern. So with the descending resistance here, the red one was kind of like, well, whatever. The orange one was like pretty legit, and basically everybody was looking at that. So once we broke down from here, we consolidate here, we back test the 200s. When we actually broke through this descending resistance right here, and you could draw it, a little bit different, depending on what time frame you're on. But this leg up right here was basically to the 200s, above the 200s, and then essentially like the breakout. So we then just kind of consolidated and went sideways, and we never really got a retrace. Like if you sold the breakout or took profits into resistance, we never really went lower than that. So you had to like kind of just suck it up and buy back into strength, but obviously with more conviction. So we have to be careful of a situation like that. And in many ways, the most bullish thing that crypto can do is essentially just have like a bullish reset right now, which is basically where price action just goes sideways while the indicator oscillators reset. So, I mean, we're not seeing like full on exhaustion right now with crypto or anything like that. But keep in mind, the last time we were inside the bullish control zone was at the peak right here. And then the time before that was at the peak right here. And, that's basically what's happening right now. So it's not crazy to think that actually this ends up being the top and we roll back over. But maybe the top's actually at like 34K or something like that. So Polkadot, it's going to zero. BNB, Binance. It's back on top of the 200s. Definitely a good sign. The trade setup still playing out nicely. I did not take this one just because, well, it's Binance coin. We're halfway there, 30% up, consolidating above the 382. Next target is obviously that 350 level. And then after that, seems likely 400 or whatever. So, hanging on. Hanging on. Because we know we got that giant air pocket if it doesn't hang on. But as long as we're bouncing the bottom of this channel, as long as we're above the 200s, actually does not look bad. So, dirty little Matic. It's above the 200s, looking good. Trade setup playing out nicely. I already took some profits on this on the push up here. Just because. But it doesn't look bad. It honestly doesn't. I mean, it looks like a lot of this stuff wants to... I mean, this one pushed up and didn't technically print bearish divergence. Oh, no, it did. I'm sorry. Because it actually put in a higher high right here and a lower high. But we see over the last like couple days, weeks, whatever, that Bitcoin is obviously leading the charge. It's been a little stronger and the alts are kind of just like hanging on. Part of that is because, everybody can like focus on Bitcoin and not be distracted by all like the shit coins. But as soon as the rally like starts picking up, everybody pulls their money out of Bitcoin because they're like, oh, 3%. I don't want 3%. I'd rather have 30% from some random shitcoin that probably goes to zero eventually. So, everybody just kind of like goes further and further out the risk curve. So if this rally continues for a while, consolidates for a while, likely really spreads out into the shitcoins and we see them overperforming, which is not like, you're like, oh man, this is a crazy theory that you're coming up with here. I mean, it just like happens over and over again. It's like pretty obvious to everybody who's been in their markets. I mean, it's the same thing with everything. Like at first you're like, oh, tech is a good investment because I like growth over value. And then next thing you know, you're like buying companies with like billions of dollars in debt with like no revenue that are like, we should be profitable by the year 3021. And you're like, oh man, I'm a little further out the risk curve than I realized here. And that's just part of the cycle. And then the contraction, and then theoretically some of the zombie bullshit goes away. The scams clean up a little bit, theoretically. So TNX here. Okay. Obviously bonds been doing quite well this year. Okay, let's talk about that. Why are bonds doing well this year? Well, they got absolutely wrecked last year. And then the new year starts. So then people bought bonds. So like, this isn't like crazy or anything like that. I know people are like, oh, bonds are up 20%. This is amazing. So is like literally every like piece of trash that's beaten down. So I'm not saying like treasury yields are trash. Obviously they're not. I mean, they actually really are, but like, you're probably going to get your money. So they're not trash in the same way that like Sam Bankman-Fried is, but they're obviously trash. So that being said, we're seeing clear bullish divergence starting to develop. We're almost to the 200s, which is our target here. So, one more green histogram and we'll basically confirm some bullish divergence. And it's not a secret that like TNX looks like it's getting ready to have some kind of rally and bonds probably have some kind of pullback. Same thing with the dollar. The dollar's pretty beat down. Some other stuff as well, some of the energy stuff. So we'll see what happens. We know we're not going to go straight up or straight down in a straight line. So still looking for just a tiny bit more downside though. Not to get greedy on this, because we did already come down to 3,378. And my target was 3,308. So stick to the guns. We'll hold strong with this one. I think maybe it could push down here one more time. So U.S. oil starting to pick up some momentum for that back test. Closing above like that previous resistance is definitely a big deal. Kind of have this one right here as well. And there's like some previous little tops and stuff. But the truth is, it looks like it wants to come up here and retest the 200 exponential. We never retested the 200 simple when we got double rejected right here, which is obviously a sign of weakness. So if we can build up some kind of strength, we probably come up here. And then, what ends up happening? I mean, that's the, maybe triple top type scenario, whatever. Guess this channel is not really useful anymore from that little from that little spring. So we'll get rid of that. But the 382 is like right here at that same level. So it seems likely we're coming up to that. We shall see. So Dow Jones. So the big risk on the Dow Jones is basically if it breaks down. And you're like, well, obviously. Yeah, I guess that was kind of a dumb statement. The big risk on the Dow Jones is if it breaks down because we'd be like losing all of the structure that we've built. Like it's great that we had this aggressive move to the upside, but we didn't really like build a foundation along the way. We just basically went straight up. So we have support at the 200 exponential and simple. But if we lose that, then it's like, oh, 1 day, 2 days, 3 days, 4 days, and we're back at the lows again. You're like a week later. So that's what I don't like about it and why it's so important to stay above the 200s. Also, this is basically going to look like an M or like, a double top essentially with this being the neckline. So a breakdown from here is probably going to be the measure move. And the measure move is straight to zero, obviously, give or take. Oh, look, there's one already here. It's like I do the same thing every day and just stick to the same thing because it works. It's just crazy. So yeah, I mean that, and that's our inverted head and shoulders. Wow, these drawing tools are great. Whoever put all this on here really knows what they're doing. So hypothetically, something like that. Now, obviously, if we break down from there, we don't have to go to zero. We can find some support and then go higher. But the truth is just consolidating here and not doing anything. Just go, if we went sideways for 2 weeks, 3 months, a year, that's great. That'd be absolutely great. And we just stay above the 200s. That's best case scenario. We don't need to just like surge straight to the upside. I mean, we're only like 7% off the all-time highs or something crazy. But we do have to be careful as we see like some temporary exhaustion and pullback. But the real question is, does this support hold? And if that one doesn't hold, does this support hold? And if that one doesn't, and then we can start playing hypotheticals. But as long as we're above the 200 exponential and simple and they're about to flip blue, it's basically the same as Bitcoin. Like it's the beginning of a bull market, like it or not. Now, can a bull market fail at any time? Sure. I mean, we started a bull market on Bitcoin. We surged from 3,000 to like 14,000. And then the Rona, black swan hit. And we went straight to zero, or back to 4,000, I mean. So it's not crazy to think something like that could happen again, no matter how much structure we build or how bullish it is. But the fact of the matter is, even when we dropped on Rona, we still put in a higher low, so it's still bullish. All right, so SPX, and part of another reason that I'm like a little more bullish on Bitcoin and crypto than I probably should be, just with like the underlying like overarching macro environment and like tightening and speculation, there's actually like a legitimate like sound money argument behind Bitcoin. Like I know I talk a lot of trash about it, and like obviously crypto has like caught the plague in the sense that it's just like a bunch of just scams and garbage. It's like everything it was not supposed to be. It's like that. It's like centralized garbage scams. But Bitcoin, I mean, does have a fixed supply. And there's enough people that believe in Bitcoin the same way that there's enough people who believe in gold, whether you agree with it or not, that it is a fixed supply, store of value type situation. So regardless of if you think it's digital gold, I mean, there's enough people that think it is, and there's a legitimate mathematical reason that you could say it is. So a lot like what we saw with the Rona and the breakout on like gold and, Bitcoin, crypto, whatever, leading up to the massive amount of money printing, there's a good possibility that a lot of the market right now is betting on, some kind of, whatever you want to call it, black swan event. It's not really a black swan because you can kind of see it coming, but let's just say there's something breaks in the, banking market or economy, or we go into, World War III, like whatever it is. If the stimulus starts coming, the money printing, the cutting of rates, like, if something breaks and all of these central banks pivot, or just even if something doesn't break and they just start like printing money like crazy or whatever, that's the same catalyst that caused the real run up for Bitcoin and gold last time. So there's a strong argument that actually like that's what's about to happen. And the truth is, it would affect the stock market too. And I don't understand why people have gone, get ready, epic rant. If you haven't noticed, this is how the rants start. So be prepared. Everybody is like really bearish against like businesses right now and everything. But like, okay, I'm not going to like break ground here. All right. We're just going to talk about like basic shit, and then we're going to make a conclusion afterwards. And I think like we're going to basically destroy the narrative of like the entire like mainstream, whatever you want to call it, market dynamics, whatever. Okay. Let's say you're a business owner and you make widgets. Okay. And you sell those widgets for a profit, which is like what a lot of businesses do. So, we're not going to get into the specific numbers of it, but let's say I have an inventory of widgets. Let's say I know roughly how many widgets I sell per year. And let's say I'm just going to have the exact same numbers every year. So we're just going to eliminate a bunch of like, the variables. So we know last year we sold 100 widgets. We know this year we're going to sell 100 widgets. If I keep 20 widgets in stock at any given time, and that's my inventory, and then the person I buy my parts to make my widgets from says, hey, those parts that you use to make your widgets, they're going up by 50%. And I say, wow, that sucks. I don't just say, well, I guess I'm just going to make like no money now. One of two things happens. You either go out of business because you can't make any more money, or you raise your prices. So obviously businesses just raise their prices. So they say, oh, my costs are going up, therefore the price is going to go up. So I'm going to pass those costs on to the consumer. Oh my gosh, like basic stuff. I know, right? It's crazy. So just wait till we get to the conclusion and you're like, oh, that's obvious. And we're like, oh, all we do is talk about basic stuff. And then the conclusion was obvious. It's crazy. No one else can do this. So the widget cost goes up. The widget price goes up. What happens to that inventory? Okay. I have those 20 widgets just sitting, in my business, and I'm going to sell them. I know I'm going to sell them, but suddenly my costs are up 20%. And now I'm going to have to raise the price on my, future widgets that I sell. I don't go, hey guys, I got 20 widgets left. If you want to get them at the old price, go ahead and swoop them up because widgets are never going to be this cheap again because my costs went up. No, of course not. I just say, well, the new price is, whatever, it was $100 for the widget before. Now it's $120 to make up for the increase in my cost. So suddenly I don't just sell the rest of those widgets for $100 and then raise the price on the new widgets that are exactly the same. No, I just start selling the widgets I already have, for 20% more. So I paid the old price for those widgets. I sold them at the new inflated price and I pocket the extra difference. So the margins are fantastic. Okay, and I know what you're thinking, but that's not how businesses work. This is how businesses work in the real world. Oh man, our prices went up. What are we going to do about it? Well, I guess it's just going to hurt our bottom line. Okay, we'll just lose money, and how should we let the shareholders know? And then at the end of the year, they're like, man, we lost money and our stock's doing terrible. What should we do about it? Maybe we should raise the price on our widgets to make up for the cost that came in. Oh my God, that's great. We should all vote on it, and then we can do that next year. I mean, come on. So it's not crazy to think that the quote unquote earnings compression that everybody's been expecting and, calling for the crash and everything to go to zero and all these businesses to make no money. Is it possible that the earnings compression is being counteracted by the inflation? If you have pricing power as a business and your costs go up, not only do you get that one-time boost because suddenly your inventory is worth a bunch more, and now that's extra profit that just goes in your pockets. Hence, record profits in 2022. Wait a minute. Are we building a case right here? We are. We're doing that together. So those record profits that we just saw are in many ways because of that surge or the extra amount that they were to sell their stuff for. And then obviously, if their prices for input costs continue to go up, if their labor costs continue to go up, they'll continue raising prices. So what does that mean for the consumer? Well, probably you get less goods for the same price, or you pay more for the same goods, or some combination of those two things. If inflation is averaging, and there's people out there that are, inflation is at 30%, it's at 20%, it's at 12%. The numbers are lies. Who cares? Let's just use the real numbers. Let's say roughly 6% was the average for 2022. We'd go through and figure it out, whatever. Let's just say it's 6% officially. If I sell those same 100 widgets and inflation is 6% and I raise prices to keep up with inflation, I mean, what really changed? Like I basically get more money coming in without doing anything extra. I do the same amount of work. I sell the same amount of stuff but the numbers look better on paper. Now, obviously, it's not better because of the inflation and all that other stuff. But on actual paper, I mean, businesses are doing fine. Like, I mean, there's other factors. Certainly, like, people could cut back on more frivolous things as their pockets get tighter or they have to spend more on gasoline or whatever. But, like, there's a strong argument that actually inflation makes all these markets and assets and everything go up, which is exactly what we saw happen. And then we saw kind of the air get let out of the bubble. But if the inflation continues, if we stay at elevated levels for, you know, the next like 3 years or whatever, and we're at 3% or 4% or 5%, I promise you, if we have an average of 3% or 4% or 5% inflation for the next like 2, 3, 5 years, I promise you these markets are going to be at new all-time highs. Now, could I be wrong? Sure. But I'm telling you, you know, if you just look at the fundamentals, it's going to push these markets up to new highs. So that being said, you know, it just seems to me like everybody's just super expecting all of these numbers to be terrible. But it's like anybody that runs a business or knows anything about it knows, hey, if labor costs go up and I have to pay my staff more money to like wait on tables or, you know, bartend or, you know, make the widgets, whatever it is, you're just going to charge more money for your thing. And if you can't do that, you don't just let it eat into your bottom line or go out of business. Like if you have pricing power, you're going to use it. And I think a lot of places still have pricing power. And as long as inflation is a narrative, you can get away with a lot of shit. So, all right, so rant over. S&P at resistance, the 200s, the descending channel. I mean, it's all there. This was the like crazy chart that we put into play. We like hyperimposed or superimposed the previous bottom right here. And that's like our candlestick thing going on here. So obviously we should have broken out already, but we didn't. But this is what happened last time. It went like massively to the upside, double topped, and then rolled over and went substantially lower. So is that what's going to happen again? I mean, we don't know. We'll have to wait and see. But, you know, we're at resistance with all this stuff. So there's going to be a lot of selling pressure. If we do break out, we'll consolidate above this level. And then, in my opinion, no all-time highs on everything. Except for trash. Don't buy trash. Unless it's crypto trash. Then it'll probably be the best performer. So triple Qs at resistance, same exact thing. Nothing has changed. We're at the key cluster of just everything. Literally, like every market is like, hey, we're right about to decide on the direction for the next few years. So just stay tuned and you'll get either the best entry ever or sit on the sidelines for another year. So XLE energy back up near all-time highs. Looks like it's ready to go. Reclaiming the slope line. XLI industrials, you know, same thing was like the Dow, obviously a little bit off the 200s, but this is kind of like our line in the sand. We don't want to break down from here or it's going to look like that M double top. And then, you know, even if we do put in a higher low, you know, it's not necessarily bearish as long as we put in a higher low, because then we can just come back up here and start building positive structure. But these are still kind of organized from like best to worst. So XLF back above the 200s at that clear resistance level. This is really deciding right now. Not quite bearish divergence because it didn't go to new all-time highs or cycle highs rather, or little bump highs, whatever you want to call it. XLB materials, again, same pattern here. You know, that M whatever. So the line in the sand is basically the 200s. This one did, well, it did print a little bit of bearish divergence, not like the Bitcoin 4-hour, but XLP consumer staples. So it didn't really have like that same pattern, but it did break down pretty aggressively. Why did consumer staples break down? Because suddenly everybody went risk on. So you say, oh, I don't like care about like the like conservative, like, you know, value stuff. I want to go further out the risk curve now because it's about to be a new bull market. So right now people are deciding, hey, do I want to be in safety or do I want to be in, you know, growth? Do I want to be in value? Do I want to be in growth? Do I want dividends or do I want stock prices surging? So XLU doesn't look nearly as good. Again, this one broke down pretty aggressively because this is one of our safety sectors and nobody needs safety anymore. We're fine. Everything's good. Everything's gravy, baby. XTN transportation fighting to reclaim the 200s. One thing about this transportation that like kind of makes me pay attention, when we see these volume spikes like this, It's worth looking at. This is freaking massive, like in comparison too. So pretty big volume spikes here. One was kind of like at this little top right here, and then one was kind of like at this little bottom. So I think right now it's that same type of thing where the market is like really, really deciding what is this trend going to be. So we're not the only ones that are basically at like the decision point. We're going to talk a little about transportation at the end of these sectors. So XLRE, real estate, still under the 200s, trying to build some structure here, higher low, trying to get through these highs here. Seems like it wants to test those 200s. XLK, tech, so we've already talked quite a bit about tech and everything. XLC, communication, so backtesting that previous support. Looks like it wants to backtest these 200s. I mean, we see what's going on right now. Everything that hasn't tested the 200s is trying to test the 200s. If whatever you're looking at hasn't tested the 200s yet, it's probably really garbage. But eventually, if the market stays bullish long enough, it probably does. Speaking of garbage, XLY, consumer discretionary, still well off of the 200s. Having trouble getting through this SR flip situation right here. All right, so UPS. Haven't looked at this one in a while. Obviously, we did some big time macro breakdowns on this. So we essentially have, let's zoom out here a little bit. So we essentially have this low from March 2020, that Rona dump ski. And then we have our peak back here from February 2022. And we just been consolidating in this downtrend. We have a high, a low, a lower high, a lower low, a lower high again. Both times when we put in the lower highs, we were getting rejected at the 200s and at this descending channel. And in this case, at the 236 as well. So we came down to 236. We put in a lower high. We came down to the 382. We back tested the 236. So we know what's next, right? One of two things. We either break out and then threaten that previous high at 208 and then probably go to new all-time highs, or we break down and go to the bottom of the channel and likely to the next fib, which would be the 0.5, which is our macro target. So we're making progress. We expected the 382. We expected the back test. The next step potentially is the test of the 0.5, which is where we really start looking at this and saying, hey, actually, you know, I might be a buyer at this level. This was a key support level right here, and we did expect that move right there. But I think we'll be able to get some value out of this thing at about 138. But if it does start consolidating above the 236 and looks like it's breaking out, you know, I'll probably start paying attention to it again, because, you know, something like UPS, an actual like legitimate company, not like one of these other like trash companies like FedEx. Speaking of trash companies like FedEx, let's take a look at this dirty diaper. All right, so FedEx, FDX. Sorry, I made myself laugh with that dirty diaper comment. I don't know where that came from. So we gapped down on this as it tried to go to zero. It was unable to get all the way to zero, but it made a valiant attempt. Came back up, closed the gap. I mean, that's it. Closed that gap nasty right here. I mean, that was the gap fill. We've had this happen quite a bit on FedEx and UPS. Obviously, we had a series of gap fill trades last year that performed quite nicely. Speaking of performing quite nicely, let's take a second and everybody just give yourself a round of applause. Pat yourself on the back, because it is literally the beginning of 2023. We're not even finished with 1 month yet, and we've already had like a dozen trade setups surge 20, 30, even more than that percentage. I mean, come the F on. Okay, congratulations. What a good year. Everybody's like, it's going to be a tough year. 2022 was a hard year. I actually heard, this is going to blow your mind because it's clearly total bullshit. I actually heard people like patting themselves on the back in the finance space for outperforming the market, like the S&P, by like 6%. I'm like, whoa, 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 whoa. Wait a minute. Excuse me, sir. Wasn't the S&P negative last year? Like, well, yeah. So you lost money, but you didn't lose as much money as if you just held the S&P. Wow. Wow. Congratulations. You did it. You lost, but you're not the biggest loser. You didn't get last place. You beat your benchmark. If I beat my benchmark by 6% and I was still negative, I would punch myself in the junk, not go on CNBC and talk about how good I am. Like, what are you talking about? Anyway, so speaking of junk, FedEx. So close the gap, back tested 200s. Let's look at this thing. All right, so we have this ascending channel, all right, which are like, it doesn't even line up down here. Well, I mean, if you like zoom way out. You look, the further out you go, the more it makes sense, I promise. Okay, there's the one. So like keeping it pretty simple here. All right, if we just pick this random bottom in 1990, and then we're just like, oh, here's a bottom down here too in 09, and then we're like, oh, there's one as well in 2020, and it's like, oh, and we did it again in 2022. I mean, it's like, it's worth paying attention to. So we bounce that. We backtest some key resistance, in this case, the 382 and possibly the weekly 200s, depending on, you know, what kind of legs this thing has. Likely get rejected here. I mean, this was clear support right there. We backtest the 236. We melt down to the 618. We backtest the 382 and then probably melt down to the 786, even lower. If we lose this trend line, it's a big deal, but I'm not like, oh, FedEx is going away. I mean, it might. I don't know. But we have this giant broadening wedge megaphone pattern. And even if we don't put in a new low down here, it seems like it wants to come down here to $100. This, I think this is going to be the macro year of like, maybe not literally year, macro like 1 to 2 year period of like just everything hitting $100. Like if you got like did a split after the split and then the price action, you had $100. Like everything's just going down to $100. I don't know if it's just like a weird coincidence, but it just seems like $100 is like the magic number. Like Tesla splits, $100. Apple, $100. Like literally everything. How about a round even balloon, baby? So bear market, if we break down from here, we got some pretty low targets. I mean, we're at 186 right now, so it's like a 50% haircut if we backtested 200s. Maybe I'm wrong. I don't know. Looks like trash to me, though. So, yeah, we're looking at some tech, and then, yeah. Let's see what we got over here. DXY, crushing it. Okay, we're almost there, guys. We're almost there. Again, I don't like to get greedy on these targets, but I want my target hit. Now, I don't know if we're going to get there. This thing is getting pretty freaking exhausted. We're coming down about to hit the slope line, and it's blue. So likely to act as support. I don't know how low we're going to go. You guys know, keep in mind also, this is the hypothetical Fibonacci. It doesn't count yet. You know, maybe we already bottomed, but probably actually we'll just hit our target. So it seems likely. We're still aggressively headed down there. 200 simple is basically flat. 200 exponential is bearish. The daily is slipping bearish for sure on this thing. At the same time that we're likely going to be or are setting up to print bullish divergence. So eventually this downtrend, like short-term retracement, whatever, will reach exhaustion and we will get a backtest. And that's when I don't want to be involved in the markets. But let's say hypothetically this happened over like the next like month and we get this surge back to the upside on the DXY. That would probably correspond with weakness in all the assets. And when that happens, if they hold their 200s, the same way this would be getting rejected off its 200s and then going lower. If everything else is coming down and finding support on their 200s, they're likely going higher. That's when I'm looking to really deploy into like what I'm calling the new bull market, which could obviously change. Speaking of bull markets, let's talk about something that's definitely not in a bull market, and that's Tesla. But who cares, because we're up like 20-something% from our buy down here. It was 108, 22%. So look, this thing's about to cross the 821 to the upside. Maybe it doesn't. Maybe it fails. Maybe it goes straight to zero because Elon Musk is mean. Yeah, I think like, I don't know though. If Elon Musk came out and was like, actually, I'm a super villain. He like shaved his head and did like the Dr. Evil thing and like, you know, started like petting a cat like aggressively all the time. I don't know. Would that be good or bad for Tesla stock? I think that would actually be good for Tesla stock. But anyway, so is Elon a supervillain? I don't know. I mean, obviously people are making him out to be. Could Elon literally dump his shares on our head and just drop this thing down aggressively? It's possible. everybody got pretty mad, like pretty negative on Tesla recently. It went from like the most cultiest thing ever that everybody loved to like the most hated thing ever that everybody hates. And honestly, this was the setup that we were talking about. Obviously we're already in the trade setup from 108. It's still nice and juicy. And, obviously we should take profits at 159. But also, if we cross this 821 to the upside for the first time since the bear cross back in September of 2022, I think we're going to get a pretty aggressive move to the upside. Now, maybe it's just something little itty bitty bump, like 22%. Maybe it's a little more serious to the fib here at 33%. But there's definitely a possibility for that 56% move. So we'll see. And obviously there's like, this was trade setup 1. This was target 2 for take profits. And then this is like the add in trade setup. And you're like, I'm confused. Welcome to my world. So we hit the measure move breakdown. We're looking for the back test of the channel. And then we'll see what happens from there. Tesla looks pretty nasty. And obviously, a lot of really bad like press and everything. But what are we really playing right now? I'm not saying Tesla has to go to new all-time highs. I'm not saying it's like this is amazing and we should go all in on it or anything. I'm just saying the chart's like setting up for a move to the upside. Now, what happens after that? Maybe we just confirm into the bear market, get rejected, and then go much lower. But we're talking about that 23 to like 37% move. We're, setting up for, this is like the first sign that we're about to have like the trend flip, at least short term. When the knife gets back on top of both the stochastics, that's like our first sign, like, hey, wait a minute, like this is starting to look okay. It means people are buying the stuff. They're buying the thing. They're investing in it. They're speculating in it, whatever. The money is flowing into it. Okay, the flow is strong with this one. Once the blue stochastic crosses above the pink stochastic, we'll get that hard buy signal. That's our second sign. And regardless of the order that takes place in this case, that will happen first. And then the next step is the blue stochastic to exit the bearish control zone at 20. So step 1, check, got it. Step 2, the blue and the hard buy. Step 3, leave the green area and just go back to neutral. And all of that, put it together, and it'll probably give us like a 20 to 40% move. And then after that, Tesla will probably just continue down to 0. But in the meantime, we'll have some fat stacks, some money in the bank, like the kids say. So yeah, that's Tesla. Microsoft. So it's hanging on for dear life here. To that 821 cross happened back here while Tesla continued to melt down. It's wanting to confirm that cross back to the upside. If it does, it probably gets above the 382. If it gets above the descending resistance, it probably retests the 200s. Just retested the 200s and we took profit, cha-ching, on that beautiful trade setup. But that being said, it's not crazy to think it just heads right back up here and does it again. At which point in time we have a higher low and then, potentially threaten the high. And then new all-time highs after that. And we talked about how that's possible because inflation. And like, if you don't believe me and you're like, you don't understand how inflation works, because once the stuff costs more money than the buying power, and then the people can't buy the stuff, and then all the businesses go out of business. Yeah, okay, sure. All the shitty businesses go out of business. All the businesses that are trash go out of business. But like, people don't stop getting stuff and food and things they need. They just get less of it, or they stop buying the stuff they don't need. So, historically, go back and look at the stock market or, various countries' stock markets during like inflation or hyperinflation. Sure, there's volatile times where things aren't great, but like if you look at something that went through, hyperinflation, like Weimar Germany example that everybody uses. Oh, it's like Weimar Germany, the hyperinflation in the United States because they're printing all the dollars. Oh. If you look at the stock market during that, their stock market's like through the freaking roof. Like, well, the equivalent. If you look at like the price of assets, like, essentially the price of gold in that currency, etc. Like, I guess that was a bad example, just saying the stock market, because there wasn't, you get my point though. Asset prices, I should say. So, that's the argument for like crypto or for gold or for stocks or for property or whatever going up, or even services. If you have skills, whatever. That's the argument for like them going up during inflation. If everybody has more dollars and everything costs more money, in the end, you probably get around the same amount of stuff. You just have to spend more dollars on it, but you're probably making more dollars too. So like, sure, the wages usually like lag the inflation by a little bit, but like, let's just say inflation just keeps on raging and like 10 years from now, everything costs twice as much. But also instead of making like 60 grand a year, you make 120,000 a year. Like, it's not really that much different. Like, you probably end up getting screwed on taxes because that's the point. And like, you know, probably you don't get your fair share because trickle down effect. But essentially, you know, it's about the same. It just sucks because, you know, you feel like everything costs more money. But, you know, if you're making $100 an hour instead of $50 an hour, but everything costs twice as much, like, who cares? Same thing. So it's really all relative. So let's talk about Apple. So for a success, this trade has kind of been a failure. Well, no, I shouldn't say that. This trade has obviously been a success. We took profits initially at like that 17% down on the short. And then we actually had that bounce back up. Our line in the sand was the 200s. We then broke lower. We're back testing that level as resistance. The truth is, I could be wrong on this one, and maybe I'm just being, you know, a big puss. But the truth is, I think this thing is going to come back up and at least retest the 200s again. And that's like 7% or so back to the upside. Yeah, I'm just not really interested in that. It's the difference between, you know, being up 19% or like 14%. And I mean, it looks like it's setting up for that. It's entering the bullish control zone. It's at resistance. It looks like it's going to break up through it. So, you know, could I be wrong? Could this literally get rejected tomorrow and then just in one candle go straight to our target? And you're like, oh, what a chicken shit. Could have had all the profits and instead you just got some of them. Yeah, it could, but I'm going to go ahead and chalk that one up. So we're going to wrap that trade up there. To tell you the truth, I always look at shorts as sort of like, you know, like a ticking time bomb. Like, I don't want to stay in shorts for like long periods of time. Like, I don't want to be short on something for like months or years typically. I'd rather be short on something when I see a nice setup and then, you know, once we hit some targets or whatever, just get out. And I would rather be like neutral on it than like net negative on this scalp position. You know, it doesn't mean obviously that I'm like selling all the Apple in like my actual portfolio, but as far as like trading and everything in this like short setup, yeah, that's a wrap for me. So, and I don't even know if anybody else participated in that. And obviously, if you take any of these trade setups, you'll immediately lose everything. Your wife will cheat on you and divorce you. You'll lose your house, your car, anything else that matters to you. And of course, you'll live in a van down by the river. So don't do the stuff or take the things or whatever it is that we were talking about. And the financial advice thing too, or taxes, not tax advice. So Google is next. So we hit our target on Google. I took profits on this. I actually took profits like just slightly lower than this. But that's cool. I mean, it was a nice trade setup. It basically bounced straight from the 0.5 to the 382. There's definitely still potential it goes to the upside. I did not close the entire position, but as always, I take profits early and often when we hit our trade setups to practice what I preach, which is discipline. That's it. It is discipline. So this also will be setting up for the W double bottom scenario. So if we do break through the 382 and then surge, my smaller position will still be in profits, just not as much as it would have been. But potentially 200s, I think. Measure move takes us to 236. Doesn't seem crazy. It's like, oh yeah, we're consolidating this area right here. If we break through that area, we probably, you know, start fighting the last area will be consolidated. So, yep. Meta still just kind of melting up here. Obviously seems like it's headed to the 200s. So this like reminds me of like Tesla, honestly. It's like everybody went from like loving Meta to like it's complete garbage and nobody wants it. capitulation, like gap down right here. And like, I mean, Tesla's like right around like here right now. And I think it's getting ready to people be like, oh, actually, you know, the thing that I used to love that I'm mad at might leave me behind. So I better FOMO in. I don't know. Not me, but other people. Amazon, the old Amazon. So we'll see what happens on this one. Earnings coming up here, a couple days away. You guys know, obviously, like, not a huge fan in new positions going into earnings, unless you have like some form of edge, which I do not. I don't know any insiders that are like hand feeding me any info or anything like that. But it does seem likely. Obviously, my prediction was that we were gonna run up on the way to earnings, and then sell off afterwards because they're going to be terrible, because 2022 is going to be net negative for Amazon somehow. Yep. Yeah, so probably Amazon. I mean, if it gets up here to 102 or 3 or whatever, which is what we're expecting, there's a good possibility it just jumps up here and fills that gap, which is what that second setup is. And then that's really just a back test of the 200s. And then afterwards, I think Amazon probably just goes to 0 or takes over the world. Could go either way. Probably the take over the world thing. Momentum, all that stuff, yeah. There's one other thing we want to talk about, which was the layoffs. So obviously there has been a lot of announcements lately of layoffs, and it can be kind of confusing to people because they don't understand, like, if you are a business and you're laying people off, that sounds like a bad thing. And like, if my buddy had a business and we were having a conversation and I was like, how's things going? And he's like, oh, they're okay. I'm like, oh, cool. And then he's like, yeah, I just like fired like, half my workforce. I'd be like, whoa, that's brutal. And then he's like, yep, I have 2 people working for me and I had to fire one of them. You're like, oh, well, that's not nearly as bad. Like, it sounded like super dramatic when you said it that way. So just watch how things are worded is my point. And one of many points we're about to get to. So watch a delivery on stuff. And my reference point here being that, like, I don't know exact numbers, so I'm just going to make up stuff that sounds legit right now. You ready? So like Microsoft hired like 75,000 people in the last like 5 years. And then the news is like, Microsoft is laying off 10,000 people. And you're like, oh my God, this is crazy. The 10,000 people have lost their jobs. And it's like, oh, I mean, they have like, 1 million employees, and 100,000 of them are from the last 5 years, and 30,000 of them are from the last 2 years, and we're firing 10,000 of them. It's like, well, in like perspective, when you look at all the data, it's actually like not that big a deal. Like, you're basically just getting rid of some of the extra people that you got because there was like, a labor shortage, because there was all this artificial demand stimulus, supply chains shut down, all that stuff. So keep that in mind when you hear about, oh, Amazon has fired another 10,000 people. And you're like, well, they just hired 300,000 people. So they're still like 290,000 people up. So keep that in mind. Also, when a company lays off a bunch of people or fires a bunch of people or lets them go or whatever, if you're an investor in that company, that's good to you. And you're like, that doesn't make any sense. Companies should be growing. But that's a cost going away. You're cutting costs. So what does that do? It protects the margins, protects the profits, protects like the underlying fundamentals of the business. And you're like, well, who cares about that? Because if you fire people, it's bad. Well, maybe. I mean, it's bad if you're the person who gets fired, sure. But I mean, the fact of the matter is, how do we value the stock market? Future value of like earnings, and then the multiple thereof. So if the expenses go down to protect profits, the value can, stay high. But if like the profits get hurt, then the exponential increase has to take place in the multiple to stay at that same price. So it's just a basic formula. And the fact of the matter is, cut costs, protect earnings. So that's what matters. And it's the same thing with like when Coke comes out and they're like, hey, we're going to charge people 8 more cents because they're addicted to our caffeine, sugar, water, crack in a can. And we're pretty sure they're going to pay it. And it's like, oh, really? You think like people are going to still buy your sugar water that they're addicted to. Go figure. So that, I mean, that's a good thing. And it's the same thing. If I tell you I'm firing one person, or if I tell you I'm charging another 2 cents a can of Coke or whatever, you know, they're net the same thing. It's just a matter of like where the dollar amount comes in. So it's not a bad thing. This is, I guess, my point from the whole thing. Stop listening to what everybody says, all the bad news, and start thinking about it realistically. And I guess in conclusion, I'd like to sum up today's rants by saying that, you know, essentially, inflation is actually really good for businesses, because people who run businesses will make sure they protect their margins by raising prices faster than their costs go up. Bullish. Firing people when you overhired a bunch of people and you net still have a bunch more employees and are still doing a bunch more business and are doing like record sales and protecting margins is a good thing, because it tells investors that you're protecting their investment, aka the multiple, aka the bottom line, aka the profit margins, which is what it's all about. So in conclusion, you can't say the same thing for crypto because there's no earnings. Wait, what? All right, yeah, so that's it. All right, so I'm going to jump in the comments, and then if you guys got any questions or anything, and then we'll go ahead and wrap it up there. Going to keep this one relatively short. All right, so Hex Evolve says, interesting how the moving averages are in different places on the CME and spot. Yeah, a lot of that Hex Evolved has to do with magic. Or no, that's not it. Oh, that's right. It's because the stock market is only open Monday through Friday, and the spot market is open on the weekends, and crazy stuff happens on the weekends. But nobody ever pays attention to stuff like that. So it's important to watch this stream, because here is the only place where we talk about original ideas and dispel bullshit that other people come up with because they're fucking morons. Not you guys, but like regular dumb people. Hex Evolve says, I was looking at the 35K level. Yeah, I think it's a good place to look at for sure. My beloved Hex went down 97%. Excuse me. I'm sorry, that's not funny. I apologize. That is kind of funny though. 97%. So what is that? I mean, do the math real quick though, Hex Evolved. If it went down 97% and then you air quotes invested in it when it was down 97%, if it ever goes back to all-time highs, I mean, you're going to be sitting pretty, dude. You're going to literally own your own, like, I don't even know. What's a large piece of land you can own? An island? You could probably buy your own state. You could probably pick up Mexico if Hex goes back to new all-time highs. J-Hoff says, fire stream. Thanks, dude. Yeah, Hex Evolve says, I purchased $250 at the high. Stop it. I mean, the first step is admitting that you have a problem. And like, you seem like a pretty grounded person overall for somebody with a name Hex Evolved. That's like, I mean, you don't seem like too culty. You're obviously a little culty. Which, I mean, I guess like if I purchased $250 of something at the all-time high, I would probably just look the other way and just never worry about it. I still have enough for coffee. Oh my God, dude. I like it. Good sense of humor, bro. But honestly, man, the truth is about Hex, and it's as crazy as it may sound. I actually like Richard Hart. I mean, sure, he's obnoxious and like you're meant to like not like him, the way he dresses and acts and stuff. It's all an act though. The dude is actually like really, really smart. The idea of Hex on paper is like pretty genius. I mean, what is Hex really? It's basically like a digital like bond. That's essentially what it is. Now you're like, yeah, well, kind of has like some Ponzi scheme elements to it. Well, sure. But I mean, isn't like the whole system just one giant Ponzi scheme right now? Isn't that really just like the pot calling the kettle black? I mean, look at the United States right now. I mean, like, not that we're like doing anything worse. We're actually like not doing things nearly as bad as a lot of other people's. So we're like the lesser of many evils. But I mean, let's be real right now. What Janet Yellen is essentially coming out saying like, hey, we don't have enough money to pay our debts. So if you don't let us borrow more money, we're going to have to default on our old debts. Oh, wait. Oh, okay. So hang on. Janet. I mean, isn't that what Bernie Madoff did? He like paid the old investors with the money from the new investors. I mean, isn't that a Ponzi scheme? So, sort of all a Ponzi scheme. I mean, you could argue that fiat currency, once like basically the world went off like an actual like gold standard, the entire world just basically went into a giant Ponzi scheme. And that's exactly like what it is. So is Hex a Ponzi scheme? Yes. Yes, it is. Is like literally everything else also a Ponzi scheme? Yeah, pretty much. Could you argue that there are some things like gold or potentially Bitcoin that are not Ponzi schemes because of sound money principles? Yes. Yes, I would say that. I would say that. I was just waiting for the bottom of Hex. I do like Richard Hart. Waiting for Pulse Chain. Yeah, I mean, Richard Hart's definitely, he's a decent dude, man. He's got, he's done some philanthropy. I like the way he talks about certain topics. Do I think that he took advantage of the situation in crypto and his knowledge by creating some cryptos and used it to get extremely rich off of? Sure. But I mean, isn't that really what life is all about? Is like developing a skill or something and then just figuring out how to make money off of it? And then, theoretically, like being some kind of like philanthropist, giving back to, health or medical research or, less fortunate people. I mean, I would say, yeah. So, I mean, I don't know. He's easy to hate. Let's put it that way. But I think it's all part of his, shtick. But anyway, enough about Richard Hart. I think we go ahead and wrap it up there. Hopefully you guys enjoyed the stream today. Thanks everybody for tuning in. See you guys on Wednesday. Going to be a big week. Off to a real nice start to the year. The main thing I'm watching for on crypto right now is short term. Actually, you know what? I did mean to mention this. So a little bonus for anybody that's stuck around. A little bonus clip. This is what I'm looking at on the 4-hour currently. So I went ahead and took profits on the Bitcoin position because we have this massive spike up here in the histogram and then a much lower spike right here as we anticipated. And then that corresponds obviously with a substantially higher high on price action. And we see the confluence as well with the stochastic here and then here as well with another lower high. So we basically have, a drive of bearish divergence. So what I'm looking for, well, we got it like instantly. What I was looking for was a back test of the 21. We got that instantly. So what I'm looking for now is this going to have a bear cross and a deep retracement? And then I'll be watching like that 20,600 level. Or is it going to like, pull one of these and then just go up again? And you're like, well, won't it already have gone up and then we'll just have missed the boat? Yeah. I'm just playing the like super short term scalpage on my position with the 821 bear cross. So if we cross the bull cross back up here, if the 200 gets above the 200 simple right here, or both those things happen, it looks a lot better to me. I expect at some point in time we're going to have a fairly violent retrace, and I'm just trying to avoid that. But the truth is, the way I'm looking at the Bitcoin chart right now, I'm not getting like overzealous because we're so extended from the 200s. I mean, we're like ridiculously far away from the 200s. It only feels like that. Like here when we had the capitulation, we're ridiculously far away from them. So one of two things can happen. We're going to go sideways long enough that the 200s catch up to us, or we're going to bounce up to those 200s. Here we saw basically we just went sideways forever until they caught up to us. Well, same thing here. We shot up here. So one of two things can happen. We're either going to have a violent retrace eventually and touch the 200s for support, or we can go sideways long enough to 200s catch up to us. Either one is acceptable. But, assuming that it was, let's say 50-50, if we just go sideways for a while or if we sell off, I'm just trying to avoid that sell off. But the truth is, as long as we're above the 200s on the daily, this is a buying opportunity for me. The longer we go sideways above 21K, and again, it's really important to pay attention to this futures chart. I know we want to be like just bullish now because we finally got above the 200s and they're blue. But I really want to get above the 200s on the futures chart as well. And then I will have substantially more conviction when they flip blue. Just because historically speaking, there have been a bunch of fake outs that took place before. And if you watch the futures chart and the spot chart and you didn't trust it when they didn't agree, you would have not gotten faked out. It's like the difference between getting faked out like 10% of the time or like 1% of the time. So for me, if I just had to look at 2 charts and then I can avoid like 90% of the fake outs, that's like pretty good for me. So I'll do that thing and then you guys can just tune in. All right, so peace. I'm out. Hope everybody have a good night. Thanks for all for tuning in today. It is 9:24 p.m. Eastern Standard Time on Sunday, January 22nd, 2023. As always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Also, not tax advice. Crypto trend trader, and I'm out. Later, y'all.